All right, it's Monday morning. Hope y'all are doing well. Stay safe, stay strong. I wanted to talk about an idea today about a way to create for oneself an inheritance that will contribute to wealth. Now, it's interestingly enough, most millionaires are actually people that just saved and invested over time, a time span of about 20 to 30 years. Most people aren't millionaires and or wealthy because of the money and or assets they've inherited from their parents or grandparents. That being said, inheriting goods, inheriting cash or contracts, whatever the case may be, businesses, inheriting those mechanisms of wealth, if you will, even if it's not $1 million, it's still wealth. It's still assets, contracts, monies, properties, whatever, that you can bring unto yourself when the previous generation passes away, hopefully after a very long and well-lived life. An inheritance is a wonderful, wonderful mechanism for myself and for my parents and for you and for your parents to actually create generational wealth and financial legacy, because as the great Benjamin Franklin said, there are two things in life that are certain, and that's death and taxes. Typically, an inheritance can avoid taxes. Typically, that's not always the case. It does have to be set up correctly. And if the previous generation owed taxes, if it somehow gets caught up in probate court, that's a problem. But typically, if everything's done right, if all the T's are crossed and the I's are dotted, typically an inheritance avoids taxes. Correct me if I'm wrong in the comments. I don't think I am. I could be. I believe that the only time, like I said, your inheritance would be taxed is if your parents or grandparents owed money and it somehow got pulled into probate court. And obviously there are some vehicles that protect better against taxes than others. That's a different video probably. But for the most part, an inheritance comes directly to the inheritee, whatever. I wanted to talk about this video for a while, or talk about this subject for a while in a video, and I've just been doing other things, but I decided today would be the day. A great way to create an inheritance, for yourself, a great way to manufacture an inheritance for yourself is to, in fact, take a life insurance policy out on your parents, your in-laws, whatever the case may be. Hold on. I know that sounds a little crazy, but you have to consider what I'm saying. An inheritance is a sum of monies or properties or whatever that passes to you upon the death of your parent, grandparent, in-law, whatever the case may be, aunt, uncle, yada, yada, yada. An inheritance passes to you. And the value of that is everyone's going to die. None of us are making out of this life, alive. No one's going to make it. We're all going to die. And if we are, in fact, all going to die, why not take advantage of an outcome that as yet is, or rather, we are unable to avoid? And again, only after a life well-lived, long, happy, successful life. All of my grandparents lived to be old. My grandma Norris, who was the last one to die, died at 92 in her bed surrounded by her grandchildren. It was a wonderful, wonderful experience. But creating an inheritance for yourself by taking out a life insurance policy on your parent is really one of the simplest ways to entrench yourself for later life. The reason that is because with a life insurance policy, the life insurance premiums are paid for with after-tax dollars. So unlike a 401k that is pre-tax dollars, you actually pay for the life insurance premium with your after-tax dollars, meaning that the death benefit, that is what the check is called that you receive once someone dies that has you as their beneficiary on a life insurance product, the death benefit passes to you tax-free because you've paid the premiums with after-tax dollars. Now, in the 80s, the wealthy were using life insurance and annuities pretty aggressively to not only pass wealth really tax-free from one generation to the next, but they were using it to grow their wealth and grow their money, so much so that the government had to step in and change some of the financial laws surrounding the product because they're very powerful, and they're still powerful today. But by taking a life insurance policy out on a parent or an in-law, you create for yourself a contract that now will act and is an inheritance for you when your parent, when your in-law, when your grandparent, when your aunt, when your uncle passes, again, after a life well lived that's long and full of hope and happiness, right? You create for yourself an inheritance. It's also one of the arguably most selfish things that a parent, uncle, grandparent, whatever in-law can do, because they've effectively created for you, or rather allowed to be created for you, an inheritance, and they've paid no money into it. None of their money, none of their assets are going towards the inheritance that you've now manufactured for yourself using a life insurance product on them. They've paid nothing. All they've done is say, yes, you can take a policy out on me, but you have to pay it. It is one of the most selfish and simultaneously beneficial things that a parent can do, a guardian, whatever, for their heir. Because again, they've allowed for an inheritance to be manufactured based on them, but they've paid no money into it. It's really a special, powerful thing when you think about it. And like all inheritances, an inheritance is wealth. Sometimes that wealth is you inherited your car that your grandma drove once a week to the grocery store, and when she passed, the car only had 50,000 miles on it, was 10 years old, and it ran like a top. That's not great wealth, but that's wealth. When my grandma Norris passed, we inherited her Mercury, and we were able to drive it for about 2 or 3 years before it finally bit the dust. That's wealth. An inheritance of any kind is wealth. Obviously, again, just like riches and wealth in general, it's not set in stone. There's different degrees to it, right? Excuse me. But it is wealth. And it's a way for you to create wealth for yourself while not seeing it as an investment, because life insurance actually isn't an investment. In the state of Indiana, insurance products in general, but insurance is a highly regulated industry, which I'm thankful for. Even in the midst of it being highly regulated, unfortunately, a lot of people still get taken advantage of. It's pretty tragic at times. But insurance is a highly regulated industry to protect the consumer who's purchasing the life insurance products, the annuities, the med supplements, the auto insurance, etc., etc. Highly regulated. And it's illegal to speak about life insurance, particularly life insurance, as an investment, because it doesn't really behave as an investment. The earnings aren't, the gains as far as the cash value, they're not really the same. It's not really as powerful at all as a mutual fund or a Roth IRA, etc., etc. But what a life insurance product is, as long as you keep paying the premium, a life insurance product is a guarantee for a certain amount of money to pass to you at an unspecified time based on when the previous generation passes, that will pass to you tax-free. Now, what do I mean by that? A Roth IRA, a mutual fund, a 401k, really any other investment product that I know of, they would be lying to you if they said it's guaranteed. Because any investment product that I know of, and I could be wrong, it's impossible to guarantee it. Because it's based on the market. The market fluctuates. We're seeing right now the market has dipped dramatically. I think it's come up a little bit. But in this time, a lot of people lost money in their 401k unless they had a very conservative investment portfolio. Maybe it stayed the same. Maybe they lost a couple $100, whatever. But a life insurance product doesn't grow the way that a mutual fund, an IRA, a Roth IRA account grows, because you're effectively purchasing, you're not investing, you're purchasing a dollar amount that will pass to you when your parent, grandparent, aunt, uncle, in-law passes away. So in that regard, the sum, the dollar amount, let's say you did a $500,000 policy, that $500,000 amount, that is a guarantee that as long as the life insurance company doesn't go bankrupt and doesn't go away, that is a guarantee that will get paid out to you when the time comes. No, a Roth IRA cannot do that. A mutual fund cannot do that. An IRA cannot do that. They cannot guarantee it. Having said that, a life insurance product goes away if you can't pay it. Now, what that means is, with a Roth IRA, a mutual fund, an IRA, et cetera, you can invest in it for X amount of years, and then let's say your budget changes and you really can't invest in it as aggressively or at all. You can pump the brakes on that investment, 401k as well. You can pump the brakes on that investment, and that money that you've accumulated thus far still stays in the account and theoretically will still generate interest, albeit lower, based on what you have invested. It doesn't go away. With a life insurance product, when you're not investing, you're purchasing. You're purchasing a dollar amount. You're purchasing an inheritance. If you stop making the premium payments, that dollar amount, that contract goes away. So there are downsides to it. The downside being, unlike other investment product, mutual fund, Roth IRA, 401k, whatever, you stop investing in those dollars, a college fund, I think it's a 529, I could be wrong about that. That money stays in that account, whether you keep investing or not. Life insurance product, that's not the case. But unlike those products, investments, there's no guarantee. A life insurance product guarantees you X amount of dollars when the time comes for that contract to be triggered to pass to you, that dollar amount, via the death of a loved one, parent, grandparent, aunt, uncle, et cetera. It's truly a powerful mechanism to create generational wealth and financial legacy for your family. The reason why people have life insurance policies is typically it's sold to them from the concept of protecting their family against an early death, an untimely death and or disease, which that's good. Those are good mechanisms, or rather good motivations to purchase life insurance. But the truth is, life insurance ultimately is an inheritance. It's ultimately a set amount of dollars that passes to you, again, once the death of the parent occurs and that contract is triggered to pay that out. It's really a powerful mechanism. And what I like most about it, it's a guarantee, again, as long as you keep paying the premium. Dave Ramsey says guarantees are bad. I disagree. The golden age of the American economy was the post-war economy, World War II. One of the reasons why it was so successful was because of the guarantee that employees had for pensions and lifelong income after they left their employment. That was one of the reasons why. It was easier for people to retire then, because even though they were making a piddly pension, it was something that they could budget, and once they had all their debt paid off, had all their assets in tow, they knew that they could go off into the sunset, and they had a lifelong payment plan, lifelong income via their pension and Social Security. So guarantees are powerful. They really are. They create great stability. But I wanted to bring that to you guys today. I may talk about it again next week, because this is really a powerful concept. And I want to say this too. This is what the wealthy do. Years ago, I worked for a company, a publisher, assisted self-publisher. And the son of at one time CEO of I believe Citibank, when his father died, and I could be wrong about the specifics, but when his father died, he inherited $500 million in life insurance products as well as other investments that his father had set up for him. And I believe he inherited it pretty much tax-free. But again, a part of that was the life insurance product that his father had taken out for them and for him. And the point that I want to say is the inheritance that he gained from his dad was vast. I mean, $500 million, that's a lot of money. But the inheritance that he gained from his father was vast, and it was through, in no small degree probably, life insurance. Inheritance, getting wealth from the previous generation, it's a wonderful way for the previous generation to protect the next generation, and so on and so forth. It builds financial legacy and strength and power, and there's a way that we, as Main Street, can take control of that right away by purchasing a life insurance policy on our parent. Again, it's not an investment. It doesn't behave the same way. However, it is a mechanism that you can generate for yourself an inheritance and ultimately wealth via that inheritance mechanism and or creating vehicle. It's a powerful thought. It really is. It's a little different. We don't hear about life insurance in this way. But I'm telling you guys, this is what the wealthy do. They're always doing it. They're always putting money back in vehicles that will pass either entirely tax-free, or they'll avoid probate, or they'll be taxed at an abysmal percent. This is what the wealthy do. And we as Main Street can do it. And we have a great product that we can do that in, which is life insurance. I'm telling you guys, look it up. Look up the benefits of life insurance. It's amazing. Now, real quick before I go, I want to talk. This only works, I want to say, this only works really with a whole life product and or a universal life or increasing death benefit life. I'll tell you what, the next video I may do another video today talking about life insurance because I'm a big believer in it. I have it on myself. I have it on my wife. It's a powerful tool to protect your family even in death. I'll talk about that in the other video too. Loving your family even in your death. It's powerful. But again, creating an inheritance for yourself is a way that you can generate wealth that isn't an investment, that comes at a later day, that can act as a guarantee, again, as long as you're making the premium. It's a powerful tool, guys. You should look into it. I can't wait to do another video about it. I really believe life insurance, if done properly, can really propel families and really generations into wealth, into prosperity. Historically, that's accurate. Wanted to bring this video to you today, guys. Go out, take the day. Let's make money. Let's go.